Welcome back to the channel. So in this video, I want to discuss a trade idea with SPCX. I put on a trade yesterday. It hasn't really moved much. So if you like the trade idea, you could put it on yourself. We're going to get into it though. So as you see on the screen, we do have SPCX here, the daily chart. First 3 days since IPO, it went up. Since then, it's gone straight down. If you've been trying to buy any of these dips, it hasn't worked out too well until it hit a price of 105 or so. Now, in this range, I've started to become interested in it for two reasons. The first, notice we tried to first bounce back here on August 3rd before coming down. We came down because that gap lower right here actually happened because of earnings. Earnings wasn't that great. I mean, even if you looked at the sentiment online on Twitter, people were not too thrilled about what was kind of being said, how it went. You know, what are we looking at? Somewhere like right there, right? That's the close, and then we dumped, right? Earnings comes out, we dumped. There's no question about it that the numbers were not great. And why? Well, it dumped right away. Okay, even before humans got a chance to trade on that information, the bots, they looked at that data, they didn't like it, they sold down that stock instantly. The conference call happened. Guess what? Elon still couldn't save the stock. It was still seen negative, the earnings, right? The stock continued to tumble. So without question, the earnings were negative. But the stock did not trade lower than $104, $105. Notice we didn't make new lows, okay? The stock's been down for over a month now. Earnings was not great. The market rejected earnings. The stock did not go lower. It still held support. And then what happens yesterday on Thursday? The first major lockup period occurs, right? Now a lot more employees are able to sell their shares. You know, obviously that's public information. So if you're somebody out there that's trying to short the stock ahead of it because like, oh, everyone's going to come out and sell their stocks, it's a no-brainer. There's supposed to be like 40% higher float, whatever that number is, whatever that figure actually is. It didn't happen, okay? It's public information, obviously. Plus, you have to keep in mind that also a lot of people that were holding on to these shares, I mean, you did always have the option, especially the big dogs, have the option of shorting the stock essentially the third or fourth day that the company's public to kind of lock in their gains on their long position, if you think about it, right? And then they can cover that come lockup period. But whatever, the point being, okay, but the stock also did not really trade lower. It still held on. So we've had two events here. We've had the earnings and we've had the lockup period come through, and the stock has continued to hold the 105 level. That to me is a sign that, hey, this is a good level to be buying at. Again, I'm not sitting here and drawing the line across the chart because I just see price bouncing off of it. Sure, you can do that, but sometimes it's just arbitrary. Like right here, why did price bounce off 105 kind of, right? Sure, you can kind of say, well, it looks like that's the opening price in that day, this and that. But it's still, you know, for the most part, still kind of arbitrary. I mean, I'm pretty sure that they were supposed to IPO maybe at 140, don't quote me, but somewhat below that. But obviously, as the bids and asks kind of hit the order book before the market opens up, it can definitely jump it higher. But it's not an arbitrary point to show you that, hey, we've had two pieces of negative news hit the markets for SPCX, and SPCX has managed to weather both of them pretty well so far, okay? And here we are. Granted, the market is up today, 30 basis points for the SPX. SPCX is having a great day, up 5% here. Now, with my earnings failure strategy, which is in this case what's happening kind of when the stock is reversing the earnings move that was occurring, normally in those situations, I wait for the close of that previous day before earnings, which if we look, we're looking over here for the close, it's 125.33. So technically at 125.33, if we surpass that, that officially is an official earnings failure trade for me, because we've managed to completely reverse the downside that we had because of earnings. Now, I did jump ahead a little bit yesterday. We were trading at 115 or so and actually putting on a spread already with some anticipation that we might end up breaking through, which, by the way, notice we still haven't. So I might put this video out and SpaceX might simply hit a top here at 120, go back to 105 and maybe chill there for the next few weeks. This very much could be the case, but there's also an option strategy that I put together specifically for that to mitigate any losses in the event that I kind of jumped the gun a little bit. And let's look at it. First, I'm just going to show it to you guys here on Interactive Brokers. This is the actual position here, right? So what are we doing here? We're selling the 115 calls and then we're buying double of the 125 calls. This is a ratio spread, okay? If you look here, we see it even easier. So we wrote 5 115 calls. Remember, these are the calls that are in the money already. This was yesterday. We wrote these calls, they're in the money already. We bought the 125 calls further out of the money. Now, even though we sold the calls that were closer to the money, we're not short the position, okay? We're not looking for the stock to go down, and that's because we have more long exposure than we have short exposure. We got 10 contracts on the long side instead of 5, even though it's out of the money. And as you see right now, my P&L right now is not that impressive, 326, and I'll show you why in a second, why, you know, it seems like a relatively small position, but when it starts to run, it's going to run pretty aggressively. And I have it set up in Thinkorswim here, which I'm going to move over for you. So let's look at this here, okay? This is the exact trade of exact contracts, and the price should be what the price is. Let me just verify. Yep, we have the right price here. Actually, I'm a penny off. Let me just adjust that. Okay, so purple line represents today, the date right here. Blue line represents if I hold this to expiration. Now, let's first talk about the idea. What if SpaceX ends up going nowhere, goes back to 110, goes back to 105, even goes lower, and I do not manage it whatsoever? What happens with my P&L? As you see here, we could look down here. If that were to happen today, I would lose $600. If that were to happen come expiration date, I'll lose $700. You see it, right? It's relatively, it's a small loss, okay? So if it gets rejected, goes lower, it's a small loss. This is in part as to why I kind of jumped the gun a little bit yesterday and I put this on, because I'm like, you know what? If I'm just wrong and it rejects back lower, I could just take this off for a few $100 loss. Now, if it goes up, right, that's where we start to make serious money. But we do want it to go up quickly, because can't help notice here, but we have this blue bar which deviates severely from that purple line. Okay, notice how if prices at 124 comes expiration, we're down $5,600 in this position. Again, we're looking right here, $5,600 in the position. Okay, this is the death valley. We want to get through this. Now, there's a reason why I picked this point here, because looking at the chart, you know, I expect, hey, either we get up here, reject, go back lower, and now we're away from that death valley, or we break through and we keep rallying through, again, going away from that death valley, okay? So I'm using this little pivot mark as my true trigger for getting into the trade. I'm using that as where my max risk is, because I expect price to go away from it. And if price does run up, let's imagine we do run back up to 150, okay? Okay, now my P&L is $8,300. If that were to happen today, which wouldn't be the case, but let's say that happens. Again, we can actually fast forward a little bit here. Let's say we go, not next Friday, the Friday after, the 21st, okay? Oh, actually, I just happened to notice this expires actually on the 21st. A lot of my options on my book right now expire in September. This one in particular, I actually set up to expire this current monthly expiration, so I apologize for that. Now, what does that actually mean for me? It does mean that I do not want to hold these options into the last week, because that is when the theta in this death valley really kicks in, right? But you can see even on Monday, you can tolerate this, okay? You see this, it's not that bad, okay? It's a max loss of $1,500 of prices over here. We want to be out of that. Again, if price gets rejected at 125 and chills back at 104, this trade idea, we're done of it, okay? We're not trying to play this anymore. So for the most part, we're really looking at next week to be the play, right? So if we go to August 12th, let's say, and price runs up, price at 140 by then, okay, we have a P&L of 4,000. You know, if it goes up high, if we're lucky and so on, you can see how it goes up severely. Again, if price gets rejected back lower, we've got a P&L of about minus $800, okay? We don't want to hold this though until into the final week, because that's when the loss here gets pretty severe. Now I do want to point out, like, to get this max loss, I mean, you'd have to essentially just like not be around and just eat the full loss, because even going to the very last day, let's say the 20th, you could see that the max loss is still like half of what you're seeing over here. So if you're going to the day before expiration and price is sitting at exactly 125, you still have that option to take half that loss of max loss. But you should never put yourself in that position. You may end up having that position at some point in your trading career where price might be up here and then there's a gap down. I've seen that. But either way, this trade is mostly meant for next week. Okay, for next week, we want to see this push higher. If we can get a move to 140, to 150, again, it's possible with something like SPCX, right? You know, we're talking about a move, 15% move, 23% move. That's what we're after. And that's my trade idea. Now I have it set up. And as I'm having this conversation with you guys, I see SPCX actually continues to be pushing up higher here. Now we are at 122. So it slowly is getting to the point where it might actually trigger this. And yeah, this is the minute chart over here. Now, if you have any questions for me, let me know in the comments below. If you wish for me to explain things a little better here or there, also please let me know. Like this video if it was helpful. Other than that, thank you guys so much for watching.